get to that, but first I've got Mark. I don't know how I'm going to handle this exactly, Mark, but I'm going to try my best. Mark says, here is a survey question. I don't know if he wants me to put up a poll or do something along those lines. Let me go to where I want to be here. Here's a survey question. The market has been phenomenally up for more than 2 months. Yeah, you noticed that too, but we've been talking about it the past 2 months, and I've mentioned extensively in our first 40 minutes of discussion here. Yeah, as of the end of December 2019. From mid-October perspective, were there market measures and market internals that the PowerOptions staff works with and pays attention to that hinted in hindsight at the direction of the sustained nature for the next several months? Well, I don't think it's going to be extended for the next several months. I could be wrong, but I'm setting up my portfolio, my positions, my VIX options, to plan for the fact that this run that we've seen in the last 2.5 months, would love for it to extend into the next 2 months of 2020. I don't feel confident it's going to. One of those reasons, of course, is because of the sell warning that was just triggered recently. We see the VIX is in a bearish mode. The put-call volume ratio is entered into a bearish mode. 4 out of the 13 broad-based indicators we use here on the PowerOptions Market Sentiment tool have gone bearish, so it's a slight sell warning. The trend was flirting with it recently, but then it readjusted. The RSI of the SPX is extremely high right now, usually at a fence to turn it. And, of course, the SPX, the SPX days over the SMA 100 has entered bearish. What that means? Well, when it gets extended, historically, or 15, 20 years or so, well, let me explain that. What we do with each one of these is we started this, I think, back in 2012, maybe 2014, and we looked at all the data for these broad indicators across the market. NASDAQ, TRIN, VIX, NASDAQ above the 100-day moving average, how many days does it go before a decline usually happens, things of that nature. And you see, we set a histogram on each one of them. So here's that number of days where SPX, which we found is a better broad market indicator, makes sense than the NASDAQ is, than the Russell 2000 is, and so forth. It's more of a better gauge of the broad market. That's why a lot of these are SPX. But the trend's there, the VIX is there too. Long story short, you take this histogram of all the data points over the past 15 years or so, and you see that in this particular case, when SPX starts to get to 60 days above its SMA 100 or 80 days, it very rarely continues to go forward. It's got to have some kind of a drop at some point. So this is usually an indicator that only maybe 7% of the time, once it hits 60 to 70 days, does it ever go above that. Usually it falls. So that's where the fences are. Okay. The last value of 55 at the last time it was a market high was 6 and minus 28. So you can see where we're setting those different ones there as a bearish indicator. In fact, it's 40 days was the fence. SPX usually turns bearish when it's been 40 days above its 100-day moving average. And other ones are set that too. Of course, the VIX, which is a complicated one. We might want to, Ernie and I talked about this, we might drastically want to change these fences. I think it should be at 12, maybe lower. So when the VIX drops below 12, that's usually a bearish indicator that the market's going to snap down and the VIX is going to snap back up. And you see it does sort of indicate that only about 3 or 4% of the time, once the VIX hits below 12, does it stay there very long before it snaps back up. And what does it have to do to get back up to 15 or 16 where it is right now? 13, 14, or 15? Well, the market has to drop and then the VIX pops up. Okay? But also you don't see it go up here rarely that much at all. So that's why, just for that end part of your question, I'm saying that I don't know for the next several months if it's going to be sustained. I personally don't feel it is. I think there's going to be a hiccup in there sometime, maybe within the next 90 days, maybe in the next 60 days. Let me check this here. Sentiment history. Sell warnings even here. And, of course, it came to fruition. Look, on 11/27, another sell warning came up. And SPX was at 3153. Dropped down to 3140, 3110, 3093, 30. So it started to creep back up. But when that sell warning was hit, it did trigger a decline. Not a lot, couple points, but it was the decline. But let me go to November 27th. So what this does is it gives me what the view was on November 27th, and I go back to history, and now it resets it for me, and I go back, and I go back. Let me go to 10/28. View sentiment history. Go back, go back. There it is. 10-2. I knew it was there. I thought it was later. I thought it was 10-7 or 10-8, but it was on 10-2 mark. That's where the light buy triggered. Okay, the light buy triggered. We were at 28.87. It had been pulling down. It was 3 bullish ones. The market had been so stressed and so depressed that the triggers reversed and it started to look at bullish. And it stayed that way. You know, you had a light buy there, then you had that. Does this mean that it was going to be for several months? No. But it did mean that I expected 20 days, 40 days, 50 days of growth when I see a light buy, especially if they're, usually I wait for a second indicator. In that case, on the market sentiment tool, I go to light buy, maybe a strong buy, definitely, but then another light buy, and I say, yeah, that's going to be probably a 40 to 50 day growth period. But there's always hiccups in there because we don't know what's going to happen. You know, any kind of political talk, someone fires a rocket into the Pacific and so forth and so on. But see, for that first month, it never left neutral, did it? Our last good trigger was a light buy, and then through all of October, it was neutral. Didn't see a sell warning. We saw a couple in November, and we saw that they were honestly justified in that case, didn't we? Let me just go to November, where were we, 28th. So through all of October, we didn't see any change from that sentiment, from the light buy that was triggered on October 2nd, okay? But see, you see there on the 27th, so we started to get those sell warnings when we were at 31.53. And what happened? Did have a little hiccup at the beginning of December, didn't we? Did have a slight pullback here, not a lot, but it was getting hesitant and it jumped back up to 31.53. But we saw these little warning signs approach. And it's not to say that it actually led to a decline. But again, then again, we talked about the beginning of December there, saw that slight hiccup in the market, not a lot, but it did change from that strong, semi-strong light buy. I'm going the wrong direction. I apologize, Mark. I wanted today. 24th. Okay. Sorry about that, folks. Okay, so we're at a sell warning period here. Market has been hesitating. Hey, we saw it pull back a little. I saw a lot of my stocks pull back today, as a matter of fact. Dell went up $1.15 yesterday and pulled back, what, $1.22 today. It was essentially a wash of 2 days of trading. But in any case, there we start seeing those sell warnings. And has it gone negative yet? No, but we did see some flux, as we talked about. That 1126 to 1127 sell warning dropped down a little bit. It had a little pullback, didn't it? It pulled back a couple hundred points almost, and then it started to recover. And then the sell warning started to appear again. It keeps pushing up, but that's 4 days in a row of that sell warning of the 13 broad-based indicators. And here, we're at 5. And we jump back to 4, and we jump back to 4. So that's what I use. And I'm not saying it's giving me a black and white picture of the market and saying, hey, Mike, you know what? The sell warning's been triggered for 3 days. That means 3 months of bearish sell. No, it doesn't mean that. It means that likely, because everything is peaking out at its highs and at those fences, Ernie expects to see some type of correction coming up in the next few weeks. Maybe not going to be big, but it's going to be maybe a valve, an easing off of this substantial growth we've seen in the last 3 months. But I did show, going back to October 2nd, that light buy was triggered. And we didn't see a change of signal until November. So that light buy was a trigger for me to buy some calls into some of the positions I was in to enhance profits. I didn't really open new married put positions, which I probably honestly should have done. But I was buying calls when I saw that light buy go. Small amounts here and buy a portfolio hedge. And when I started to see the sell warnings, I closed them out and took the profits, or closed half, and readjusted my position as well. That's the metric that I use, Mark. The sentiment history. The market sentiment tool, Mark. That's what I'm struggling with, saying Mark and market sentiment in the same sentence. But that's what I use. And right now, I don't know if it's going to extend. I also had an interesting comment slash question from a customer the other day via email. I think it was via email. Yes, it was. And his the comment was sort of along the lines of, I'm looking to open new positions in the next year, and I like the idea of the married put limited risk position. But do you think there's any validity into the fact that both political parties will do what they can to push up the market to make it look good, even though there's a lot of debt and the metrics on the market sort of look bad, i.e. sell warning, and lots of debt and everything, but do you think they'll do everything they can to keep the market looking propped up so it looks better come the election? Yeah, well, you kind of almost think one party would want to chop it down. The other party's going to want to inflate it up if they could even do that. But it's kind of an interesting point, isn't it? Could we be faked out? And I'm not a conspiracy theorist, and I'm not going to try to trade one direction or the other based on who looks like they're winning an election in a poll and who's controlling judgment that's made for the economy, because the Fed is still controlling what they control without any, real political influence or real political pressure. They do what they sort of want to do that they feel is best. I'm just going to keep trading the way I trade, Mark, with the protection in place and the proper position sizing with my spread positions, knowing that even if the wrong direction happens from what I'm expecting to happen, I can't get hurt too bad long term. But to answer your question directly, once more, review, market sentiment tool showed me that light buy in the beginning of October. I used that to buy the calls. When I started seeing the sell warnings, I took some of those profits over those leverage calls, added puts to a couple of them to create a strangle in case there was a down push, using the unrealized profits, of course, that I had in the long calls for that. Okay, fantastic. All right, so let me see if there's a quick follow-up to that. Okay, sorry, I misunderstood. Survey is an opportunity to, opportunity to be wide-ranging and selective in response. Okay, so my response probably wasn't as wide-ranging as you liked, but that's probably should have gone more. We could have gone more in depth into the different ones there, but that's what I've been using. So that's a great question, though. By the way, Mark, I really appreciate it. I don't think we've had actually a time to review that in the last 2 months. I think a lot of us have just been excited that we were having a good market. We were in place of the bullish to sort of make up for some of the losses we might have had at the beginning of the year with that last 2.5 month run, but didn't really get a chance during the webinars to look at why and what was pointing to all of this happening. Yeah, you see my ones today, the Dell. FN, the new married put I opened up, which was up 2% as of the other day, but it just dropped 83 cents today. And of course, the Yandex position's up about 5% since I got into it on December 17th, I believe, as well. Okay. All right. Excellent.